What is up, everybody? Welcome back to Bitcoin and Markets. Happy Thursday. One day until the halving. We're going to be talking about the halving. We're going to be talking about the Bitcoin price. We're going to be talking about crazy stuff going on in macro. And what else? Oh, and I wanted to get to some demographics. I was asked a question on the Telegram, and so I wanted to cover some thoughts on the demographic issues. But let me share my screen here real quick. I think this is the right one. Yes, this is the right one. Let me zoom out just a little bit. And I wanted to put out a tweet saying that I'm live. So stand by 1 second, guys. Sorry about this. And let me get the links to all of the different stuff. Include that in the tweet. And hashtag Bitcoin, hashtag macro. How about that? Okay. Just to see who we can get in here. I will be looking down below at the comments. I will also be checking the comments on Telegram to see what you guys are up to, thinking about, where I'm going wrong, where I'm going right. But all right, let me get back to this page. There we go. So bitcoinandmarkets.com. Check it out. That is where you guys can subscribe to all of my stuff, all my content. You can support the show, all of that. I also write for bmpro.substack.com. Let me pull that up. You guys can see that here. Okay, we had a post from Dylan LeClaire. So he actually made a new post for BM Pro. I know that we're trying to get him to write one. But I'm doing 3 posts for them a week. So check that out, bmpro.substack.com. Okay, let's go to the charts. How about that? Let's get right into it. Actually, let's do this instead first. Bitcoin halving clock, 1 day, 11 hours. So that brings us to roughly Friday night at 9 p.m. Eastern. Friday night, 9 p.m. Eastern, I will be live streaming it. That is 4:20 UTC time. So you can see here the estimated halving is 20 April instead of 19 because it's like 0100 UTC on the 20th. But for Eastern time, it's like 9 p.m. Eastern time. I'm going to be live streaming it at least on Telegram with my community there. Maybe we will go live on YouTube and Rumble. Don't know yet. Okay, let's go to the charts. The Bitcoin price, we'll see. We'll see. Let me bring up this image that I had. And where was it? There it is. Okay. So I shared this yesterday on Twitter and Telegram. This is a Wyckoff reaccumulation. And let me make sure all my levels are good. 1 second. Okay. Yep, we're good. Telegram, am I unmuted? All right. So this is a Wyckoff reaccumulation. So you can see it's coming from below and it's going up. I guess you can't really see my cursor. You can see the crosshairs there. It's coming up and then has this reaccumulation, dips down here, fakes everybody out with a dip down, and then finally takes off. When I saw this, I saw someone else mention this on Twitter, and I thought that this was perfect because this first point up here kind of matches perfectly with how I've been describing what happened on March 4th. March 4th was this all-important top. We talked about this level the whole time we were accumulating, going sideways. And that is like a very important point in this Wyckoff reaccumulation. Anyways, so is this just a fake out down and a move higher? I think so. I don't think we're really going to go much lower here. The uncertainty, uncertainty in markets causes prices to be lower than they otherwise would be. So if we add a lot of uncertainty to the price, or sorry, a lot of uncertainty to the market through the halving, because a lot of people, there's a lot of FUD out there about what the halving even is. Remember, a couple weeks ago, there was this little video going around about somebody, some guy in his car talking about the Bitcoin halving as in cutting the supply in half. So your wallet, your balance in your wallet would be half. That's not what's happening. If you're new to Bitcoin and you're just finding my content, then the halving is when the new issuance of coins is cut in half. Um, so a lot of people don't even understand what's going on with the halving. Plus, a lot of people, there's FUD around, are the miners going to be okay? I've highlighted many instances of this in the mainstream media, where they are fudding that this is going to cause a major culling event in the mining industry. Of course, that they don't understand that you don't have to shut off mining equipment to get bought out by somebody else. You know, if they declare bankruptcy, it's not like a mining data center, like a big mining outfit is going to turn off their machines. No, they continue mining. They even might get bought out or whatever and continue mining. There's nothing saying that they're going to shut off. Okay. And we've gone through different halvings. We've never had a significant issue. The biggest issue ever for the Bitcoin mining industry, well, there's two, I would say. One is the scaling conflict back in 2016 and 2017. The mining industry was very centralized under Bitmain and in China, and they tried to push through a change to Bitcoin. They were unsuccessful because miners don't control the network. Economic nodes control the network. But so that was a big, I would say, crisis event in Bitcoin mining. The second one is the banning of mining in China, where all of a sudden, I think it was like 30 or 40% of the hash rate went offline, or slowly went offline and moved, either to Kazakhstan, to the United States, to Iceland or Norway or wherever else they were going, maybe Siberia, Russia. So they had to move out of China. And that was a huge, significant event in Bitcoin mining. But notice, out of those two things, neither of those were a halving. Halvings really don't affect the mining industry. So, well, they do affect the mining industry, but they don't affect like a major culling event like people are fudding. So, anyway, all that to say is there is uncertainty around the halving in a macroeconomic sense. And so, when the halving occurs and the network is fine, and maybe a week after these miners are doing great, maybe even their stock prices start rallying in the Marathon and Riot and all that, the big guys, the uncertainty will go away and price will start to rise. So that's what I'm looking at around this halving, how I kind of am thinking about this whole process. And actually, while we're talking about this, let's go into the Bitcoin miners and take a look at some of their stuff here. The big guys. Here's Marathon. And you can see on the daily chart, it doesn't look so hot, right? They broke down below this support, this horizontal support. But look where we are on the RSI. We did touch oversold. Let me just double check that. 30. So we didn't touch oversold exactly, but we are right in that neighborhood of being oversold. Some of these others, like Riot, is very oversold. They are down here at 25 on the RSI, looking pretty ugly. If you just look at this horizontal support, it broke there, it broke this horizontal level, important level that it was trying to hold for a couple days, and then it broke through. So these are looking very ugly. But when you look at the RSI, you're saying, okay, this is oversold. It's probably getting close to a bottom. We could see something like this where we saw oversold here and it continued to drop. In this fashion. So we had a bullish divergence here on the RSI, a lower low in price, but a higher low in the RSI. We could need to see something like that. That might take a couple months to play out. But the halving is still this milestone event. And if the miners make it through this, which they will, a lot of uncertainty is going to be lifted from this market. And I do think that this oversold condition could lead to a big rally here in some of these big guys. Cypher, not oversold, but they've been one of the best performing miners over the last couple months. CleanSpark, not oversold, but same story here. They've been doing very well relative to Riot and Marathon, the big guys. Hut 8, same. Bitfarms, they did touch oversold as well, and they are bouncing. This is an interesting chart here. So Bitfarms bouncing off oversold conditions. So I can see the miners starting to turn around after the Bitcoin halving, which is something I would be watching out for. We've talked about this in the past. I do think that rallies, like Bitcoin miners, will be leading indicators for price rallies. So we will be watching that. Okay, back to the Bitcoin chart. I'm going to hide this. I don't think we have to touch oversold on Bitcoin. I was looking at some of this other daily action from previous periods, and you can see we do hang out like around mid 30s in the RSI, and this is not a major sell-off yet. So if you go back to like this previous bull market, right? And let's just delete some of this. If you look back at this previous bull market on these corrections as we're loading up for takeoff, which is about where we are, okay, it never touched oversold. The RSI, even on this big sell-off here in September of 2020, it did not touch oversold. So we don't have to get to an oversold condition before we go up. Also, if we look back to this bull market, 2017, 2016, 2017, as we're loading up to on the roller coaster parabola, these massive sell-offs, 30, 40% sell-offs, never touched oversold. So we don't have to touch oversold in the beginnings of a bull market, but as we go further, I think the likelihood of a rally, like if we rally, say, to over 100,000 or 100, get to 150,000, and we have a massive pullback, I think the likelihood of touching oversold after that rally is much more likely than right now. Just taking a look at some historical stuff. So, okay, that's where we are on the Bitcoin price. Pivotal moment in the history of Bitcoin coming up here. Let's take a look at some other macro stuff. So the dollar, going to take some of this out. Of course, the garbage truck's coming right as I am live streaming. So we had a breakout in the dollar recently. Dollar wrecking ball. The dollar is going to strengthen. A lot of people don't understand the dynamics of the US dollar in the global financial system, but everything is predicated on the dollar. Even the euro is backed by the dollar. Okay, they hold dollar reserves. China, the Chinese yuan, they hold dollar denominated reserves, at least in U.S. treasuries. Japan, same thing. So everything is dollar denominated, and if the dollar rallies, that creates a pressure for dollar denominated debt around the world. So a Japanese company that is in a globalized market with import exports, they're going to take out loans in dollars, denominated in dollars. However, domestically, they make money in yen. So they have to sell that yen to get dollars to pay their debt. Well, if the yen is crashing against the dollar, that becomes much harder to get the needed dollars. So there's this dollar shortage. And yes, people say, oh, we can just default. Okay, or the Japanese or the Chinese or whoever, the Germans, whoever owe this US dollar denominated debt, they can just default. But that's not true, because then they will find it harder to get credit elsewhere. If you default on this dollar denominated debt, then you're pretty much signing not a death warrant for your company, but it's going to be much, much harder and much more expensive, especially going into recession, right? The reason why they're having trouble paying this debt is because the economy is in trouble. So if they default, they're going to be entering this recessionary period with the inability to access credit again. And so they do not want whatever, they will do everything to not default on their dollar denominated debts. But okay, so that's the US dollar. What do I expect? Well, I've talked in the past, let me go to the weekly. I've talked in the past about entering a range, and we kind of have done that. Let me just delete some of these lines. Um, you know, we were in this range. Let me get a rectangle. After this big rally, we are in this range for a long ass period of time. If we just like talk 90 to 100. So we were in this range for a very long time. Even with QE going on, with everything, the dollar was in this range. Okay, and that's what I kind of expected on this time. So maybe this is more what I was expecting, um, like this type of range. But we are range bound. Okay, we have been in this very narrow range from 107 to 100 to 107 for going on, let's see, 18 months. And that'll probably continue. I would be surprised if it really rallies hard. I would also be surprised if it crashes out of that range for a significant period of time. Okay. So this is different than what you hear on most macro people. They'll say, "Oh, the dollar is garbage. The dollar is going away." The dollar is not going away. The end game for this whole thing, this whole era, okay, over the next 10, 20 years, is for the dollar to be backed by Bitcoin. That is the end goal. The dollar has changed many times throughout history, from silver to gold to bimetallic to gold again to a different gold standard to a total um, floating standard, then finally to a credit based standard. So it's changed so many times. It's not crazy. It should be the most likely thing to happen, that it changes back to a commodity based standard, and that would be Bitcoin. It would be Bitcoin or gold. But since Bitcoin is superior in almost every way to gold, that it should be a Bitcoin standard. That is the end goal to all of this. All right, let's take a look at gold. Speaking of gold, and we'll go back to the daily and we'll reset this. All right, so it's had a major rally or major run here. It is very oversold. It's going to have to come down even on the weekly. Just look at this on the weekly. This is the most overbought it has been on the weekly since the very, very peak over here back in August of 2020. And prior to that, we had to go back to, it's a very rare occurrence, okay, on the weekly. So it's possible that it continues to go and we get a divergence, but gold is very overbought right now, and we will see where that takes us. Remember, my going in thesis over this last year, and especially into 2024, was that Bitcoin would benefit and gold would benefit from the deflationary pressure of sliding into recession. Also, stocks would benefit, and that's what we have seen. We've seen all of these things come true. We've seen Bitcoin go up, we've seen stocks go up, we've seen gold go up. The one thing that I have, oh, and I, speaking of the next prediction here, I have talked about oil a lot. And oil is, I said oil would prove to be relatively weak. Okay. So stocks would go up, Bitcoin would go up, gold would go up, oil would be relatively weak. All these people talking about $200 a barrel oil, all this fear mongering, they don't understand what's going on with the global financial system. They don't understand what's going on with the evolution of money. And they just extrapolate linearly from one thing, one event, one part, one metric, and they take it to, what is that term? Absurd, ad infinitum to absurdity or whatever. And that's what they do. They're linear thinkers. They can't think in a complex way. But oil has been weak, and all those other things have come to pass. Now, the one area that I am not happy with how my prediction has performed is the US 10-year and bonds in general. I mean, this is starting to get close to these highs. If we measure this out, these highs from back in October, right now we're about 7% off the highs. I don't like this at all. This is very well, I do like it in the sense that this means the economy is actually growing. If the economy can support higher rates, that means this economy is growing. That means there's more profitable ways to employ your capital than to buy treasuries. And if the rate here is 4.6%, that means there's more profitable uses of your capital than 4.6%. That's good. That's a thriving economy. I would say 5%, 6%, maybe even higher than that because there's a little bit of slop because of risk, right? So that means you're able to find opportunities in the private sector that is yielding 6% or higher. That's great. That's great news for the economy. The bad thing, the reason why I kind of don't like it is because I was wrong about this one. I thought we were going to continue falling and we would have been down to 3% by now. But we have not done that yet. But it's coming. It's definitely coming. In a recession, yields will fall. So this is the one sticking point. And it does make me question myself, make me question my thesis here. If we go to here, let's take a look at some inversions. We'll go to the weekly. And here we have, this is the 10-year, 3-month. Still heavily inverted. And remember, guys, this has never inverted without a recession. So this is what we're looking at. This inversion is the longest in history, and it signals a horrible outcome, an absolutely horrible outcome for the economy. I saw Joe Carlasari on Twitter the other day, and he was like, name me one thing that shows evidence that we actually will have a recession. He's trying to push back on this or pick apart some macro stuff. And I was just like, yield curves. The yield curves are inverted. We're going to have a recession. If you want to bet against the yield curve, have freaking fun. We will have a recession, and the yield curve tells us this. Look at around the world. Japan's in recession. Germany's in recession. China's in recession. UK is in recession. The next top economies in the world are in recession. The US is the only exception. It's showing robust growth right now. But that will change because it's globally synchronized. It's globally connected. Everybody's globally connected. The US, I've talked about this. I started talking about this maybe 3-4 years ago, but the US is the least exposed to international trade. And people find that hard to believe. They're like, how is that possible? The US is the largest economy. It's like the biggest trading partner for most people. And up until very recently, most of the world. Now China has edged out the United States to be the top trading partner. But still, the US is number 1 or 2 trading partner of almost every country in the world. Yet, how can international trade be so insignificant for the US? Well, because the US is just that big compared to all these other countries. The US has 10% of GDP is dependent on international trade outside of North America. So if you take out Mexico and Canada, and then you take a look at China, it's 30, 40, 50%. If you look at Germany, it's, I think, 30%. So these are major economies that are completely dependent on international trade. And when we have a deglobalization event, when we have a recession, Those more tightly woven countries are going to get affected first. If your economy is 30% based on international trade and your trade partners start going into recession, you are going to follow them more rapidly than if you are less connected to the international trade. I hope that makes sense. So these countries are all going into recession. China's in recession, even though their official numbers don't say that, because their official numbers are, well, one, their GDP is counted differently than the United States. It's a goal seeked number, literally. The central government will say, we want you to do 5% growth. So then the local governments will go out there and build bridges to nowhere. They'll build ghost cities. They'll create dig ditches and fill them back in, sort of thing, and say, look, our GDP grew by 5%. Yay, we hit our target. Well, of course, because you literally spent enough and borrowed enough to hit your target. It doesn't mean that it's productive growth. It's backwards from the way the US counts it, we count it, and most of the world counts it as output. Not goal seeked output, but output from the economy. So anyway, they're in recession. All these people are in recession. We're not going to avoid it, and the yield curve says as much. US 10-year minus 2-year. This is the one people kind of commonly know. I'm going to hide some of these things. This is old. All right. And get rid of this one. So this one is closer to uninverting, actually, which is interesting. And we will be watching this closely. All right. That is enough with the macro. Let me go back to the Bitcoin chart, and I'm going to take a look at the comments down below. If you guys are on YouTube, Rumble, or Telegram, you guys can make comments. Let me reset this, and I'll go back to log, because that's how Bitcoin is, right? Oh, what the hell is going on here? Oh, because it's already reset. Okay, let me take a look at the comments. Five people watching. Like, comment, subscribe. It is a different time than I usually go out. I usually go out at like 3, 4 p.m. Eastern time. So I am doing a morning one. But I didn't get a chance to live stream yesterday. So I wanted to circle back, and do it this morning. Now let me take a look at Telegrams, if there's any comments in here. RSI on the weeklies from Point. So yes, RSI. I don't have the stochastic one. I just have the plain RSI. I could maybe pull that up. There we go. So stochastic. Yeah, it is looking nice. It's getting close down here to being totally reset. The regular RSI is now totally reset and ready to go back higher. If we look at some previous examples, dipping back into normal territory before we go to the next leg higher. And this is during the 2016-17 bull market. So yes, it was oversold to a similar level that we were this time. If I pull this over a little bit. And then it dips down into normal territory and then comes back out, dips back down, comes back out. I don't think we'll get this much of a sawtooth pattern. You can see it's been a little bit more gentle, but we will probably be dipping down into normal territory before we go up. And that was one thing that we had been watching for this whole period since March 4th. For the last 6 weeks, we've been watching for this particular thing right here to get back into normal territory, and it has now. So yeah, good point. Boots on Rand says that Portland, Oregon is a hive of activity. Doesn't look like anybody's holding back. Boots on the ground macro. Yes, it's going to be different. Okay, when some places will boom, but it's a net marginal activity. And when you have a credit based system, this is a good point. When you have a credit based system, it's the net, it's the marginal borrower, because if you aren't expanding, you're defaulting. If you can't keep your net credit creation above zero, it's going to be negative, and that means defaults, and that means deflation, and that means recession. So yes, there can be spots of booming. I remember after COVID here in North Florida, it was nuts. I was judging my view of kind of the US economy based off the amount of semis that I saw on the interstate. Driving from Jacksonville to Orlando and stuff, that the interstates were just back to back semi trailers. And I'm like, wow, the economy is really booming. And so there are going to be parts of the country that are different, but it's on net if credit is expanding or contracting. And yeah, and that goes globally as well. So if credit is contracting in Japan and Germany and China, but we're expanding here, okay, maybe right now on net we're at zero in the world. And all we need to do is a little bit of slowdown in the US, and it falls into negative, and that starts defaults happening, right? And so, yeah, it's crazy to think about that kind of holistically. All right, let me take a look at the other places, other chats. Only 3 people watching on YouTube and Rumble. That's all right. That's all right. Okay. What did I want to get into now? Well, for people watching this in the future on YouTube and Rumble, I know the guys over on Telegram, they know all of my thoughts on demographics, but there was a little bit. Let me just show this. If I can pull this up. I don't know if I can, but can I save? Okay. And can I open an image in a browser window? Let's see. Downloads. Can I open in browser? Open with. Let's try. I'm going to try. No, that's not going to let me do it. Man. Let me just open it in Paint and see if I can share this. Actually, sorry guys for this. I'm just going to open normal. If I can find it. And now I'm going to try to share this. This one. Hey, I got it. I got it. Okay, percentage of Americans married by birth decade. Look at this I mean, it started slow, right? And then bam, bam, 90s, nobody's getting married. And if you're not married by this age, like, it's probably not going to like reaccelerate higher. Okay. If you're not getting married by your late 20s, you're not going to get married. I mean, maybe second marriages, but not your first marriage. If you're 30 and you haven't been married, it's very rare that you're going to get married. I also have seen something where if you don't have a kid by the age of 30, it's like 50% that you will even have a child. So this is bad. So why am I talking about this? Well, because we had a slight back and forth in Telegram about why this is important, and I brought up this old piece that I wrote. It's not that old. When did I write this? September 3rd of 2023. this went out. So about 6 months ago. Demographic collapse. Why should we care? And I go through all of this background, like it's not what you think it is. Anyway, I read through it this morning and I wanted to read through it again here on the live stream just for fun, especially for people finding my show for the first time on YouTube and Rumble or whatever. This is what I'm thinking about for demographics and why it's important. So the future is not what you thought. If you're anything like me, you enjoyed sci-fi growing up. Shows like Star Trek, movies like Star Wars, flying cars, space stations, Sigourney Weaver fighting aliens, world-spanning cities, linear advancement to the future. I imagined a future with far more abundance, technology, exploration, and understanding. However, in 2023, it has become painfully obvious that that kind of future is only a childish fantasy. More recent sci-fi is slightly more realistic, one might say. The popular series The Expanse, for instance, has no warp drive or hyperspace, no artificial gravity. I mean, I guess they do have the proto-molecule and the rings, okay, but they don't have warp drive and they don't have like hyperspace drives. This was some weird other technology. Anyway, and they didn't invent it, right? They just were sent it. Anyway, they have no artificial gravity and portrays life in space as living on the edge of survival. However, even The Expanse is based on a future with vastly more human beings. Earth has 30 billion, with another 5 to 10 billion on Mars. And it's only set like 200 years in the future, I think, or maybe 300, in a similar time frame of Star Trek. So there's no way in 200 years we're going to have 30 billion people. No way. Absolutely zero way. In 200 years, we'll be lucky to have probably 4 billion. Anyways, it wouldn't make intuitive sense to have all that technology and there be, say, only 1 billion people. It's as if we inherently know that progress requires an expanding population, or that economic and technological growth goes hand in hand with population growth. As of now, we will never get there. It appears our lifetime is an ever shrinking population. The human race will not go extinct. I won't go that far, but some places will. South Korea, for example, is facing 95% population decline in the next 100 years. And one stat that I've heard recently that kind of makes this stand out is saying that out of 100 great grandparents, there will only be 5 great grandchildren in Korea. That's how fast the population is declining. Their government projects the extinction of 96.5% of their urban areas by 2117, and it'll probably be faster than that if you count emigration. Okay, nothing has worked to stem the tide. It's only getting worse year by year. Their fertility rate hit a staggering 0.78 so far in 2023, and I saw that it's down to 0.72, I believe, now. So it keeps falling. And emigration is going to get worse. People are going to leave. A very different view of the future is starting to emerge, not the sci-fi future of incremental improvement in technology, living standards, and political organization. It is much more bleak. The coming 100 years will see the global population first age, then decline at a rate that precludes higher living standards and technological advancement. Just maintaining our current standard of living as a globe is very unlikely. In this post, I'll explain this. Okay, so what? The typical reaction you get when trying to discuss the severity of the demographic situation is, so what? It's hard to summarize such a broad topic, but I often respond like this. Imagine fewer people doing fewer things. Fewer people doing fewer things and demanding fewer things. Each generation until disaster. Above, where I said some places will have trouble keeping the lights on, I wasn't kidding, and I don't think I read that, but there will be fewer engineers to run and maintain power plants, fewer line technicians to fix power lines, fewer electricians to run the wires, fewer people to purchase the electricity, making the power plant unprofitable in the first place. We saw the exact same thing in Detroit, but more on that below. It's a snowball rolling downhill. Infrastructure needs people to invest in it, to maintain it, and to use it. With an ever decreasing demand, the infrastructure calculus breaks down. Another example is roads. We'll have fewer roads, fewer people driving on roads, fewer people paying taxes for upkeep, and fewer people to fix them. Roads that aren't maintained will become impassable in short order. Even a well maintained asphalt road will only last 20 to 30 years. So if it's not well maintained, it could be 10 to 20 years. We will see fewer miles of passable roads each year, which will increase transportation costs for trucks with fewer drivers to drive them. Some might say, we can redesign the roads or power grids more efficiently. Those people have not yet grasped that they will have fewer people paying for, doing, and demanding less. You can't redesign it and build it. I mean, yeah, you can redesign it. I can have fun with my pencil and paper and say, oh, we should redesign it like this because this will be more efficient. But who's going to do it? Who's going to demand that? Ghost cities in Japan or in China could only happen because the global demand for their products. But if global demand for everything is decreasing, you don't have the ability to redesign and actually build it. Okay. The entire industries and supply chains will become uneconomic. Say a supply chain that runs through 15 countries before the widget makes its way back to the US consumer. The production process became so complex because the producer could cut costs by doing so. As demand shrinks because there are fewer customers and costs rise because fewer sailors, truckers, and low income foreign workers, the complex supply chains quickly become uneconomic. If the product can't be produced domestically, it might not be produced at all. And that's really bad for a lot of places in the world. The US has very broad spectrum raw materials, resources, broad spectrum, especially when we're located next to Mexico for um, more like labor and stuff, like cheaper labor. That there's there's a broad spectrum of self-sufficiency here in the United States, but most countries don't have that. Most countries do not have that. And especially when you start talking about fertilizer and food production, things could get ugly very quickly if the fertilizer supply chains break down because everything is uneconomic to do. All right. People often think the greedy capitalist can stand to have their fat cat margins squeezed a little bit. People don't understand how narrow margins actually are. Below, I highlight some. Okay. Imagine demographic collapse squeezing margins by 10%. Great swaths of industry will require massive overhauls, however, with fewer people to do the work required, or shutting down altogether. Trucking has a average margin of 1.29%, groceries 1.96%, education 2.9, farming 5.6, and that's kind of a little bit in the middle there on the, I would say, higher end of these uneconomic ones. Overall average margins in the economy 8.8%, 8.9%. So if we have margin squeezed by 10%, we're going to have most things really feeling the pain. Okay? Understanding economic decline. Economic growth is easy for people to understand. More people doing more things, creating more wealth, supporting more credit, resulting in rising living standards. The reverse is much harder to conceptualize outside of a communist hellhole. Fewer people doing fewer things, creating less wealth, supporting less credit, resulting in lower living standards. This isn't like a plague or a war, where once the event is over, things return to business as usual. If that were the case, population would naturally stabilize. People would return to the same professions, same activities, just with fewer people. Like the if half the population went away in some fast event, then we would still have generally the same complexity of labor, division of labor and stuff. We would just have fewer doctors because half the doctors are gone. But we have those, each doctor has half as many patients. So, it equalizes itself out. But we're not talking about a fast process here. Demographic collapse is different because the new normal is slow creeping population loss year after year. The event never ends. All people can look forward to is it getting worse next year. I'll apply a couple concepts from economics to hopefully drive this point home. Many people understand network effects in technology. Each new member that joins a network increases the total value of the network for all existing members. Metcalfe's law says the total value of the network increases exponentially as new people join. For instance, a network twice as large will be 4 times as valuable because there are 4 times as many connections. And here's this image. The reverse of Metcalfe's law is also valid and is what we are facing. The value of a network collapses rapidly as people leave the network. If you think of an economy as a large network, as population grows, benefits accrue to the entire network. Granted, these benefits are not equally distributed in most cases, but living standards rise for the society as a whole. We have more inventors, more scientists, more teachers, more communication, more positive externalities, more entrepreneurs, more and faster everything. That is if your population is rising. Your population rising and the network of the economy is rising. What a demographic collapse means is the forced unwinding of those network effects. As the population shrinks, you get progressively greater negative feedback effects. It is fewer inventors, fewer scientists, fewer teachers, fewer entrepreneurs, fewer laborers, less and slower everything. Another analogy from economics is the economies of scale. This is where cost per unit goes down with added scale due to dividing the fixed cost between more units of output. Producing more units lowers the price to the end consumer for an individual unit, helping them afford more things, helping the consumer afford more things, and increasing their standard of living. Economies of scale are lost with fewer people doing fewer things, demanding less, etc. The economies of scale that have been so beneficial over the last 200 years were enabled by rising demand and will reverse on the whole with falling demand. Why produce more if you can't sell it? As the number of units goes down, the price to the end consumer will go up, making it so you can afford less, decreasing your standard of living. This might seem too bleak, but you only have to look at South Korean or Japanese cities where we already have the exact devastating effects. It will not happen at the same speed everywhere. Some places might experience temporary economic booms along the way, or even stave off the worst effects for 50 years or more, as I expect for the US. But as a whole, the world is already beginning this trend, and we don't know how to stop it without radical change. Okay, so here are some things that people say. They say, oh, robots can help. Actually, before I get into this part, let me see if there are any comments. We have 9 people watching on YouTube and Rumble. What's up, guys? Thanks for joining. Ansel Linder, Bitcoin and Markets. Check out bitcoinandmarkets.com is my home website for all my content. I am going out YouTube, Rumble, some days on Twitter, and on Telegram. So Telegram is my main community. Let me see if you guys have any more comments over on Telegram. No chart up. Oh, yeah, sorry, I must have messed that up. Rand says, Bill Gates said, through the proper use of vaccines, we can lower populations by 15%. You won't need that. Population is going to drop by 15% in the next, say, 50 years easily. Over 100 years, we could be looking at a 50% population decline. And if we don't stop it, if it keeps getting worse, I can see going to a billion people in 200 years, maybe, you know? or faster, 150 years. We have to stop it. There has to be a way. It's going to cause so much pain. I mean, it'll eventually stop. The demographic decline will eventually stop because uh, the pain will be so great. The pain will be so great that we have to switch. We have to stop. That's what I'm trying to avoid, or what I think would be good to avoid. But anyway, okay. Food Network healthy. What you need to know before eating. What is this? Oh, eating bugs. Oh man, no, no. Okay, yeah, Bill does not look healthy. Anyways, let's get back to the article, and let me just pull this up and maximize this. Okay, actually, I think I saw a comment here. I don't want to leave my uh, John Delaney on YouTube. Good stuff. Just logged in. We'll rewind to catch the whole thing. Thanks, man. Thanks for being here and hanging out. I've seen your comments on other streams. Good to have you back. Okay, can robots help? Of course, robots or automation will save us, right? No. Robots do not supplement demand, they only add to supply. Adding supply does not fix a demand problem. The market response to falling demand will be price declines, followed by declines in supply. So, you know how this works. Okay, this is a common economics 101. If demand falls, prices fall. Well, if demand falls relative to supply, prices fall. But then that has a feedback loop into shrinking the supply. This is supply and demand. And if you have demand falling, eventually supply will also fall and come back into balance. So if you make this, that's the way the market heals itself. But if you meet falling demand with rising supply, you get disaster. So robots are a disaster. Robot labor is a disaster. It's going to drive, I mean, it's just going to misallocate everything. Okay. When speaking about demographic decline, most people only considered labor shortages. However, falling supply is the result of declining demand. Falling supply is the result of declining demand. And robots don't fix that. Robots need people to make them, to repair them. But we have fewer people doing fewer things. Remember, robots are cheaper to operate, perhaps, but more expensive up front. You'll need credit to finance their development and installation, access to which is decreasing in a shrinking world. The upfront cost also requires a positive return on investment, which will be much less certain as global demand is collapsing and profits are uncertain. Lastly, robots rely on lights staying on, and that is not given. The idea that robots will save us from a demographic collapse is based on the lifetime of ever increasing GDP and standards of living. Robots are great for booming economies where demand is increasing and workers can level up to new valuable specializations, letting robots take on the menial jobs like welds in a car assembly line, those arms that are coming in and doing all the welds and things and putting on the panels and like the menial things they can do, but that allows the people to move up in a more complexity of division of labor, a higher complexity of division of labor, more specialization. However, as economies shrink, those valuable specializations slowly disappear. Division of labor goes in reverse, and robots become direct competition for people they are supposed to be serving. So, an example of this is like, okay, how many different types of doctors are there? And let's just take a look at some of these doctors that specialize in certain things. Um, if you have fewer doctors, you have fewer doctors to do all the different specializations. So there's not going to be like a different doctor for every single organ. There's going to be more generalized doctors. that are more specific, like surgeons, yes. But if you're a surgeon, you're probably also going to have to be some sort of clinical guy too, because there's going to be fewer doctors to serve these fewer people, and there's going to be fewer people that need very um, specialized surgeries. So you start losing the demand, and you're losing the people to fill that role anyway. People won't be able to afford plastic surgery. So instead of having a certain amount of plastic surgeons per population, you almost have none because there's there's very little ability to pay for plastic surgery because the economy is collapsing. So as the economy shrinks, you start losing specializations and division of labor. And as you do that, it pushes those people down the specialization ladder to the menial jobs again. But those menial jobs are what the robots were doing. So now you have direct competition between people and robots for jobs. And that is not a good, uh, that's not a place I would want to be a robot because they are going to get taken down. All right. Aging and its effects. Poor demographics is not a cliff, it is more of a wave. People don't simply die, they grow old first. That is precisely why a demographic collapse is hard to see until it's too late. It happens slowly but relentlessly, like a tsunami. People keep getting old and workers keep disappearing. Our prime productive years are between 35 and 65 years of age. Once we retire, our income is usually fixed income, living off investments, drawing down on the capital stock of the economy. So you once you retire, you're no longer productively employed. Maybe a lot of people still are, maybe they get a part-time job to stay from getting too bored in retirement or something. But the most people are they retire, they get out of their productive jobs, and now what they're doing on net is withdrawing from the capital stock in retirement. Okay. Our consumption drops off as well, but not as fast as our income. The major consumption period of our lives is 35 to 65, when we are starting a family. Maybe, in this case, we're talking about demographics, buying a home, cars, travel, etc. Retired people tend to be on tight budgets compared to those in the prime productive age group. And you can see 35, 45, 55, and it falls off pretty dramatically from there. So you're not producing and you're not consuming, but you're old. You are consuming certain things like healthcare. On the image below, I overlaid the demographic pyramid of Japan onto the earnings by age. Okay. The red arrow is the population bulge, saving them from collapse today. But in 15 years, they're going to be in trouble. So right here, this is the last final bulge, that's population bulge, that's saving them from collapse. But you can just see as this bulge moves through time and goes out to here, collapse happens because everybody's going to be old and they're going to be consuming but not producing, and they're going to be consuming less. All right. Estimated demographics for Japan by 2050 show the grim future. Don't forget, this has been locked in because the people replacing the prime age bulge which have already had to be born. So this is fast forwarding. Look at that. Disaster. Lastly, we need to talk about pensions. Okay, let's skip that. Um, Historical comparisons. So there have been a few historical comparisons, but none are that great, actually. Um, I've selected 3 different ones. Okay, so here's the Black Death, 1347 through 1352. The plague reoccurred various times. All told, 25% of the global population hit. Europe's population in 1430 may have been 50 to 75% lower than in 1290. Wow. The population of Europe would not return to pre-plague numbers until approximately 1550. But remember, this event is different because these people rapidly disappeared. It wasn't a recurring, moving downhill, inability to stop it, grinding lower. It happened pretty quick. It didn't affect the long term trajectory. All right. So, most people with whom I've discussed this topic consistently bring up the fact that wages rose during this time because of a shortage of labor. Peasants had bargaining power they didn't have before. While that is true, it wrongly ignores the other side of the equation. Demand fell. Trade. So, why did it take so long to get back up in for the Middle Ages, the medieval times? Horrible economic period for Europe. Why did it take so long to get out of that? Because demand fell. Okay. Trade nearly stopped during these years. The amount of land under cultivation dropped, prices and taxes went up, and many landowners were ruined and couldn't organize peasant labor, leading peasants to leave for greener pastures, literally. A competition arose around keeping peasants on your land with wage and tax pressure. Landowners often competed on services they could offer. And we're going to see that in the future with governments. What services can you offer to attract immigrants, the immigrants you want as well, the skilled immigrants? The poor often fled the cities into the countryside. There was social unrest. People blamed themselves as sinners. They blamed Jews, forcing the Jews to flee east to Poland. Large Several large-scale riots broke out in major cities as poor became discontented with the treatment by the elites. The drop in output in Europe was more than other places because it was disproportionately hit by the plague. There were no surplus agricultural production. Sorry, there was no surplus agricultural production or retail goods to export. Silver became the biggest export, leading to even more of a silver shortage and harsher taxes. Ireland. So Ireland was 6.5 million people in before the Great Famine, the potato blight, right? But it fell to around 3 million and it has never recovered. You can see that came down here and it has never recovered and they won't recover. It will never recover. Probably for the foreseeable future, right? Next couple 100 years, 300 years, this will never recover. They are already in demographic decline right now. Okay. Detroit's population peaked in 1950, and it's less than half of what it was at the peak now. Decline culminated in the city declaring bankruptcy in 2013 and the government being taken over by the state of Michigan. Detroit's downfall can be traced to the decline of General Motors. Okay, so as the city's tax base shrank, the quality of schools, infrastructure, and public services also declined. This led more people to leave and tax receipts to fall even further. To tie Detroit into my infrastructure discussion above about keeping the lights on, post bankruptcy in 2014, only 40% of the city's streetlights worked. One of the major programs at the time was getting them fixed. It took a concerted effort over 2 years to do so. After the 2013 bankruptcy, the city of Detroit set up a land bank, which ended up owning 95,000 structures. Okay, blah, blah, blah. Swaths of the city were abandoned and reclaimed by the forest. This is a crazy image of these. This is 2009, 15, 19, 2022. It's wilderness again. Detroit's downward spiral has slowed. There is revitalization in the downtown, and demolished abandoned structures have eased strain on the city budget. It's still far from making a lasting revival because it suffers from the same demographic trap as everywhere else. It is also a very localized event. Detroit had the rest of the country to rely on. So it was one city surrounded by other places that didn't have the same collapse going on. So they could draw on the efforts of others. Its situation was never seen as terminal because it could turn it around and attract people back to the city. Imagine if everywhere was Detroit. No city can turn it around and attract people back because every city is losing population. Once again, we see some patterns. Mass emigration and corruption are the two biggest themes we see repeated here. Its decline was also more rapid than the global decline that is coming. It lost 65% of its population in 70 years, where the developed world as a whole is on pace to lose roughly 50% in 100 years. However, some places are declining more rapidly. All right. Then I talk about killing the planet, but really we are it's the exact opposite. We are mastering the planet. In the past few decades, forests have come back around the world. I showed a Telegram the other day about the forest cover of France from 50 years ago or whatever to today, and it's just wildly different. It's probably doubled in green over the last 50 years, and that's for a lot of places. Okay, yes, maybe the rainforest in Brazil has been cut down or been cut back, but most other places are greening. So the earth is healthier. People are dying less and less of climate related reasons. And if we and this is on top of population figures that are continue to go higher. So on top of that, population figures alone point to a self-contradiction in their argument and the argument is that we need fewer people to save the planet. That's actually backwards. If we believe that our population and economies have soared while we have been making the earth less hospitable to humans, is that what we're to believe? Each iteration of climate alarmism has a different D-Day, blah, blah, blah. Fewer climate related deaths, higher standards of living than before. The facts say the earth becomes more habitable with more people. More people, higher living standards, less climate related deaths. Fewer people, it becomes less habitable, more climate related deaths. More safe, not less. Blah, 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 blah. Conclusion. Okay, so that's that. Hope you guys got something out of that. I always like to revisit that every once in a while. This is demographic collapse. Why should we care? And now I'm going to take a look at some of your comments, if there are any out there. Got 10 people watching on YouTube and Rumble. Thanks for hanging out, guys. Like, comment, subscribe. You can turn on notifications so that you can see when I'm going live. I do mainly live streams on this channel. I really rarely ever put out any sort of pre-produced content, but there you go. Let me check Telegram, see what's up with those guys. A couple more comments. Yeah, Spagball, you bring up AI, and I agree the AI is not going to solve anything either. It's going to make some things a little easier, which isn't necessarily a path to growth. Like I was discussing that my mom was visiting. She was staying with us last week. And I was talking to her because AI came up in our conversations. And I was talking to her about how I use ChatGPT. And mainly it's to cure writer's block. Like I'm writing something and I'm like, okay, ChatGPT, here's what I have. Help me clear my writer's block. What can I add to this, or where can I go with this piece, right? And then it'll spit something out. Now that's good. That increases my productivity. But if everybody's doing that, it's going to increase everybody's productivity, even if it's not valuable. Like even if my productivity is not valuable, which some might say that's the case, but even if that's not valuable, so it's just increasing noise. More people can write more articles. More people can do more scientific studies and write scientific studies. More people can do this and that and this and that. but that doesn't increase the signal. And I really do also think this that okay, let's go back 150 years, 1850, Victorian England. And what's the signal? Like the average person is a husband or a wife, a mother, a father, maybe even a child, whatever. The average person, how much signal could they absorb in a day? I mean, yeah, they had their work. They went around. They didn't have a car. Most likely, if you lived in a city, you didn't have a horse. Maybe if you lived in the country, you had a horse. You had the farm. You had all of your ins and outs that you need to do for that day. A lot of different tasks, domestic duties or professional duties, whatever the case is. But you have this certain amount of signal that you can absorb. It's the same today. You're not absorbing more signal because we have the internet, because you're reading a lot of news, or even that you're watching, let's say, educational YouTube videos, which I try to get my kids to do. If they're going to be watching YouTube, it has to be educational, like history or physics or science or something. Um, so your ability to absorb signal has not changed. It's just the amount of noise out there. I really do believe that. And noise probably has some sort of connection to our overall mental well-being. So we can't absorb any more signal, but we're surrounded by a lot more noise, and we're also a lot more depressed. We're a lot less happy than we were in the past when we had less noise, a higher signal to noise ratio. Now we have very high noise to low signal. So AI is just going to increase the noise level. It's going to increase the rates of depression. It's going to increase the rates of mental illness. It's going to increase all of these things. And it's going to be bad for demographics because depressed people don't make babies. Depressed people don't get married. Depressed people don't make babies most of the time. Let's say you're depressed as an adolescent going into your 20s. And by the time you hit 20, or by the time you hit 30, if you're not married and starting to have kids, it's pretty much over. So AI, I think, is going to just exacerbate this demographic decline. And AI is also very expensive to run. I mean, just think of all the electricity that uses, all the data center, all the manual labor that goes into keeping those machines running. Fewer people doing fewer things, remember? Less ability to pay for these things. I asked ChatGPT a couple months ago, maybe now, and I asked it like, um, wouldn't it make sense for you to have to earn money, have to use money? Because ChatGPT costs money to maintain. How do we know that what it's using that money for is economic, is productive? Well, you know it by if people are willing to pay for it. So the chat GPTs should be, it should have to earn its way. It needs to have a recognition of profit. That's the only way it's going to understand resource allocation. A lot of people thinking about making AI into making major decisions for our economy, putting the power in the hands of AI to make these decisions. But how can it do that? How can it make resource allocation decisions without prices, without a fundamental understanding of prices? Like a child doesn't understand what the difference between $100 and $1 is. They don't understand. They only understand when they have to go to work and then they have to earn that money then to make resource allocation decisions with it. So AI must have to earn money on its own. And I think that's a great opportunity for Bitcoin. And there's already people talking or using Bitcoin for like micropayments to AIs and stuff. That's going to have to be the way of the future, is that. But I don't think that it's actually AI isn't going to last. I mean, it might be like the peak of human civilization, and this demographic collapse is just going to unravel everything, right? Um, but anyway, that's it. Let's take a look at the Bitcoin price again, real quick. Daily, moving higher, guys. We are moving higher here. 63,000. I'm liking this a lot. This is looking very, very good. Um, there we go. So that's where we're going to end it for today. Let me just check one more time for comments here. Philip says AI isn't just chat GPT poetry. Check what Palantir is doing. Faster business insights and predictive analytics via. Okay, I agree, but those things are susceptible to noise as well. Okay. Those things are susceptible to noise. Imagine, okay, so Palantir has an offensive AI right now. Well, what about defensive AI? They probably have an AI to spit out noise to other people using similar AIs. So you're going to be spamming AI with bad information. And an AI is going to be able to figure out how to best take out or how to best spam another AI. Right? So you're just increasing the noise ratio. But yeah, I mean, it's very possible I'm wrong. But again, it's all about noise. And it's also all about the economy continuing to decline and deteriorate because of demographics. It's not going to be able to support it. So, anyway, thanks for the comment there. All right, guys. Well, that's where I'm going to end it. Again, I usually live stream in about 3 or 4 p.m. I'm doing a little bit early because I missed yesterday. So, that's it. Like, comment, subscribe. Join me over on Telegram, t.me/Bitcoin and markets. Check out the Twitter at Ansel Lindner. And that's going to be doing it for today. So have a good rest of your day. I'll see you guys for the halving tomorrow. Bye.